All right, guys. So today we have the FOMC Minutes report. It drops in about an hour. All right, so FOMC Minutes report goes live. Let me get rid of this, and then let me share the sound. Man, I gotta get some blinds for my room here. Sun's gonna be in my eye. All right, so I'm looking at the market. Let me see. Hold on. Out of Quant Tower real quick. You see Apple, Q both bouncing back, it looks like. Q back over 400 for a split second. Kind of a sideways day. Not too bad. So no, today's not the rate decision. Today is the minutes report of last rate decision. Yeah, I got the sun in my eyes. I'm trying to see where it's coming from. I guess it's coming from right there. I gotta figure out how to put something up to block that. Let me see what I can probably block it with this. Hold on one second, guys. I'll be right back. I'm trying to block the sun from my eyes so I'm not just struggling this whole thing. But yeah, look at the Q on the right. Look at Apple on the left. There we go. That's about as good as I'm going to get it. Yeah, all good, Chris. So yeah, we can take a look at Apple. Apple now over the volume weighted average price. Tesla back over 240s. Very sideways day. I guess the market's waiting for this. Let's do a poll on Twitter. Alright, so doing a poll on Twitter. It's been a minute. SPX. Do a poll. So we got a couple hours. We got this poll live. How do you think the trend? I think right now we're pretty sideways. I think if you look at the Q on the right side, we're pretty flat on the day. Again, you can kind of see this sideways trend here. Put a 5-minute chart up, it might look the same, but pretty neutral. Again, we'll do a poll right here as well. Pretty neutral. All right, so we're going to do a poll on YouTube. Does the market close red or green today after FOMC minutes? There you go. Somebody said, is minus 0.7% flat? Basically flat. I mean, it's pretty sideways. Mostly I'm talking about since the opening bell. but I don't think 0.7%. I don't think anything less than a percentage point is any type of significant move. I think the market is very obviously sideways since the opening bell. Again, you can kind of see this most, in the Q, where you have the Q. Let's see, hold on. You got the Q opening here, and now we are here. So, I mean, I think that looks pretty neutral to me. I know some people are pushing like the big story. I think everybody that called for a market crash last year is now all of a sudden starting to act like the market is somehow just the end of the world. But I think when you look at it like this, it's pretty obvious. Like, look, this is what they're calling the end of the world today. You know what I mean? And so I think a lot of people who have been calling for bearish action are trying to be right, and that's okay. In the end, we haven't had any type of significant pullback. I think we're down like 3% from the highs. So I mean, unless we're gonna drop another 15%, I don't think we're at an alarming place yet. Now, if we start significantly dropping, that's a different story, but I don't think that's today. I think right now on the Q, we're basically flat since the opening bell. And like, yeah, we gapped down a little bit, but I don't think it's like a super terrible gap down or anything like that. I think it's pretty normal. The Russell is small caps. So the Russell is small caps, Yair. And so the Russell is, mostly small cap index fund. So yeah, I mean, even the Russell, brother. I mean, let's pull up the Russell if we're talking about it. So, here's a daily chart. We've had a couple red days, but I mean, still very green over the last 52 weeks. You put a weekly chart up. I mean, again, I think you got to take yourself outside of the story of the market and look at the actual charts. That's the drop we're in right now, Oh, cryptos are certainly down. Crypto, the news from Matrixport basically saying that they think all the Bitcoin ETFs are going to get rejected by the SEC and Gary G. That's certainly a big story. Crypto is down some, but broad markets aren't really, not yet at least. Yeah, we put up, like, here's a weekly chart. You put up the SPY, you got a very similar thing. I mean, look, here's all-time highs. We are right there. So just not the big parabolic downward move I'm seeing a lot of people making videos about. Again, I think yeah, maybe Brian, we'll see, bro. I hope so. But again, I'm bullish, so I mean, maybe I'm just biased against the Bears. FOMC is at 2 p.m. I'll put a timer up. I mean, it doesn't mean you're wrong, Marcus. If you're super bearish right now, you might be right, brother. Don't let me influence you, dude. I really don't know. I really don't know. I think the market can do whatever, bro. Well, all I'm trying to say is, like, I see people making videos talking about how, the market is just catastrophic right now. And again, I just don't see it. I don't know where they're getting this from. I think what it really is, psychologically is, like, I think a lot of them have made big bearish predictions and were wrong. And so it's kind of confirmation bias. Like, they want us to be crashing right now because that's what they predicted. But I think they're prematurely calling that. I think so far we've had this little bitty blip right here. You see the little red dot? I don't think we're down enough to where we have to end red this week. I think if we have a good day today, I think this will probably mark the end of the green streak where we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 green weeks in a row. I think this week is probably the end of it, but it doesn't take away the 9, green weeks that we've had in a row here. Hey, Happy New Year, brother. All right, so we got some votes. 63% of people on Twitter think the FOMC Minutes report is going to help the market. 37% of people think it's going to hurt the market. Let's look at our YouTube votes. 59% of people think it's going to be red after FOMC minutes. 42% of people think it's going to be green. Yeah, I mean, look, if you look at, okay, here's a little homework for you guys. If you look at all the people that recently made videos talking about how the market is just tanking uncontrollably and like it's just the end of the world, scroll back to their old videos and look to see if they predicted market crashes in like the third quarter of 2023. Right? I'll tell you this, a lot of them did. And so I think I don't think it's a coincidence that now they're embellishing or exaggerating the 3 red days we've had now. You know what I mean? I think it's very self-evident, but you know, maybe I'm just biased to the upside. Maybe that's true. Yeah, I don't think it's going to affect the market that much either. The FOMC Minutes report. And I'm not talking about being bearish on real estate. I saw, you know, I know like my boy Mitch with Benzinga was talking about like real estate stuff. I think that's a different market than this market. So I think that's different. So I actually like that. I think I'm bearish on real estate as well. So I'm not talking about them, you know, just to clarify. Was there a fire drill? I missed it. Oh well, it's all good. $2 p.m. Eastern Standard Time. I trade on a lot of different time frames. I usually use 5-minute or 1 minute. I look at weekly, like the SPY I got over here on a weekly perspective. Here's a 5-minute chart. And again, the last few days is obviously bearish, right? But I think it's kind of something in which if you go from 420s all the way to 480s, 490s, and then you pull back to 470s, is that really bearish or is that just kind of normal stair-stepping action? You know, I guess it's kind of like this. If you go like this, are we going to call this bearish? I don't think so. I think it's probably a stair-stepping action. But again, maybe I'm wrong. I do think we're probably a little extended. All right, so NVIDIA now under the volume weighted average price, under the 200 EMA. So I don't know if that's a bad sign or not. 45 minutes, we got about 200 people here. Yeah, the thing to do is buy 1,000 shares of Tesla, look at it in 5 years. I don't hate that idea. Yeah, I mean, I already made my money on Nike over the last couple days, but it's definitely down some. Oil, Walmart up a little bit. Slap that like button if you haven't already, team. We appreciate it. Again, about 60% of people think we're going to end red again. Yeah, I don't know if I would consider right now a discount. Just because we've had 3 days of pullbacks, I don't necessarily think it's like the best ever right now. I think with how much the market's up, if we want true extension to the downside, I think we have to. I think we got to pull back a little bit more. I don't know if we're there yet. Maybe. I don't know. All right, so the first 150. Oh, is AMC down again today? Dang, bro, AMC down to 560s, dude. AMC is one of the biggest losing stocks I've had all year. I mean, I'm green on the year of 2023, but AMC is one of the worst ones, bro. One of the worst ones. Still kind of slowly hitting my coffee. My stomach feels a little bit better, but ugh. Gotta pull up Discord. Did I ever tell you guys I got that watch? I don't want to be too like. I'm not trying to brag about it, but I did get a new watch. Coin 5.5% jump at the opening bell. Is it really? Yeah. What are options looking like though right now? You know, to buy one bundle of 145 strike price options, I think I'm probably going to lose if I do, but I also think that if I'm right and the ETFs do get rejected, then it could be huge and it could be good risk reward potential. You know, you're risking like a little bit under $600 to potentially make thousands if the ETF doesn't get approved and we have some significant drops in Coinbase and Bitcoin and cryptos. What do you guys think? Do y'all like that trade idea? I know it means it's going against the grain here, but still. What about silver? What up, bro? What about gold after FOMC? What about crude? I think crude is up today. I don't know. I see Exxon is up. I'm green on Exxon. Crude. Yeah. Oil's up. Rest in peace, Bitcoin. Minutes happen at 2 p.m. Eastern Standard Time today. 40 minutes. Bitcoin's still holding down. You know what I miss? I miss freaking pizza. Like, now that I got older, my stomach can't handle tomatoes anymore, dude. It's the worst thing freaking ever. You know, you never understand why getting older sucks. It's mostly because I can't eat pizza or donuts anymore. Pizza and donuts. I can't have both of them. How dare my health, man. Gold. A lot of people talking about gold. Let's take a look. All right, here's the SPY on the left. There's the Q on the right. Look at gold, man. Gold's just dumping today. Margin calls. I've only got about $11,500 in positions right now, so I'm really pretty light in portfolio-wise. Like, I've got less than 12K in stocks. I've scaled out of most of it before the end of the year. I know maybe that wasn't the best tax move, but still, you know, we were green last year, you know. All right, so the SEC today scheduled meetings today with the New York Stock Exchange, NASDAQ, CBOE to finalize comments on spot Bitcoin ETFs, according to Fox Business. Wait, so... I saw some people posting that the spot Bitcoin ETF got rejected by the SEC. Is Coinbase borrowable? I don't think so. It's hard to borrow. Nope, can't short it, so it'd have to do with put options. It's just the only ones are 9 days away, put options. Nah. I'm just gonna hold off. They're speculating that it will, that the SEC will reject. Yeah, I stopped drinking lactose as well. All right, guys, slap that like button, hit the subscribe button here. We got 9 likes. Listen, I don't know how many we actually like or how many we actually have so far, but hit the like button, team. You know you want to. Try one time. Do it now. Down to 38K today. Mirror is selling off today because of it. I don't think any of these are Riot. Oh, there is one that I could take. Hold on. One of them is ETB. Alright, well. Alright, so we're... There we go. Alright, we've scaled into a position. Just a hedging position, honestly. Apple starting to come back over 185s. There we go. We got 59. Mayor's up 14%. Hey, what's up, Jonathan? To ETF or not ETF? Mayor's up too. Up to 2100 today. All right, guys. We still got over 30 minutes before this report. Slap the like button, hit the subscribe button. If you don't know what the FOMC Minutes report is, the FOMC Minutes report is a detailed breakdown of the last FOMC meeting. This last FOMC meeting was in mid-December. The FOMC Minutes report is a full breakdown of what that is and what they did and why they chose to make the decisions that they did. It's a 12-page document. We will detail everything. We're going to use AI to interpret it very quickly as well so you can understand what's going on. And potentially what to look for at the end of this month. At the end of this month, we have our next FOMC meeting with Big Papa Jerome Powell. Next week, we've got CPI and PPI. Tomorrow, we have jobless claims, non-farm employment, and some other stuff. And then Friday, we have non-farm payrolls and unemployment data. So a big list of stuff going on the next couple weeks followed. And then after all that stuff, we're going to have the FOMC meeting at the end of this month. So that's what today is about. It is a breakdown of why the Fed chose to make the decisions that they did during the last FOMC meeting. We'll detail this here. All right. Put this up so you guys can get a better understanding too. Mayor's up 14%. How you think SoFi will go down more? Suffered from the downgrade today. I'm not sure. I heard some good and bad stuff about SoFi, but I really don't know what they're going to do. SoFi, too new of a company for me to really be comfortable with. It's down so much on a longer term perspective from 28.20s all the way down to under 10s right now. But it didn't it have like a rebound period? Yeah, but if you look at like a 4-hour chart, over 180 days, 6 months. It's up a lot over 6 months. Actually, it's not up that much. It's up like 30% in 6 months, which I guess isn't the end of the world, but with how much it moves, I think it probably could have done more, but too fresh of a company. So we don't expect market bounces from this. Not necessarily. We don't know what we're going to get from this. We could get upward movement, downward movement, good movement, bad movement. It depends on what they say. It depends on how dovish or hawkish the Fed was in this report. And so we'll detail it when it happens. But yeah. All right, we got over 300. Too much power in one stock. What do you think on gold when FOMC gets released? I really don't know what gold's going to do. Yeah, I really don't know. Hopefully we get some good stuff from gold. Gold's down a lot, so the extension's on the downside. All right, so yeah, here's Tesla. Tesla over 240s. 240 seems to be a big psychological level. We don't know what the expectations are for this, really. We don't know what we're going to say, what we're going to do. We don't know what the market's going to move. What direction the market's going to move. We got a decent amount of votes. Over 70% of people think this is going to help the market on Twitter. We got like 70 plus votes, which is high for Twitter engagement. 29% think it's going to hurt the market. So, again, we'll see. I'm waiting for it here, team. We usually get a bunch of people. So, the cannabis ETF. I hope it needs to be legalized. Like, again, the people that are against it are usually kind of stuck in their ways. Like, you have to understand, I'm not really like super pro cannabis, but I think it should be legalized for a couple different reasons. Number one, the negative effects of it versus something like alcohol are so mild. Again, compared to relative to alcohol, marijuana is objectively less harmful, and I don't think it's necessarily like fair or, reasonable to have something that is so bad for humans like alcohol, but versus something that is much more mild, much less toxic, much less negative effects, much less inebriation in general in cannabis, and as well as the benefits of it doesn't cause physical withdrawal symptoms. It ultimately can be a really good non-narcotic, non-physically addicting pain reliever. There's just a lot of arguments for it, and there needs to be an even standard of legalization. You can't sell liquor at gas stations and then turn around and then some people even drink liquor and then turn around and criticize cannabis legalization. That's the most hypocritical way you could ever be. And in the end, if something is in that way super, hypocritical in the laws, then I think you got to just legalize it and tax it. Let people consume what they want to consume as long as it's not hurting anybody else. Yeah, I don't know what the FOMC Minutes report is going to say. I really don't. I hope they say something dovish, which means a more expanding monetary policy, pushing for an expansion of the economy. Yeah, well, it's not just them. It's also drug companies, pharmaceutical industry, and the prison industry are the biggest lobbyist groups against cannabis. And so it's and it makes sense when you think about it, because it's it makes sense when you think about it in that the more people that use cannabis, the less they need to use alcohol. The less they're going to get in trouble and go to jail through drunk driving. The less the police and law enforcement will be able to prosecute them, and the less that they'll need these super narcotic, physically, dependent drugs. It's just much better to legalize it all, in my opinion. All right, guys. Hey, we got 30 minutes still. Yeah, I mean, I'm okay with like getting rid of DUIs and universally, or not getting rid of it. I'm okay with like prosecuting people that do that. You know what I mean? Like, that's understandable. If people are getting super messed up and driving, they should be prosecuted. You know, I just don't think we should play favorites with one substance versus the other. You know, and I think when you look at like cannabis stocks, you know, there were a lot of them that we thought would be really big, specifically Tilray, TLRY. We thought Tilray was going to rip up and just be this super successful company. At one point, Tilray was almost $300 a share when you look at it. So at one point, Tilray was $300 a share. We had stocks like ACB, which is now under 50 cents, was once at $150. And so what you see a lot of the time with politicians specifically is that neither side truly wants to legalize it, you know, and one side can blame the other side and say the other side's stopping them or whatever it is, but neither side truly wants it legalized, because whenever they put out legislation for it, it's always legislation that they know is never going to pass. Like, they put out stuff that they know the other side is not going to agree with. Both sides are getting too much PAC money from lobbyist groups, you know what I mean, to legalize it. And specifically for cannabis stocks, you know, you have to question whether full-on federal legalization would even help some of these companies, because it's going to open them up to so much competition that it might actually hurt them more than it'll help them, because now they can stay localized with less competition. If you open up the floodgates there, some of them might not do as well as people think as well. But, you know, in the end, you've heard a lot of stuff about legalization over the past few years, but who knows if it'll happen. Yeah, non-farm payrolls, unemployment drops Friday as well, Nima. So we got unemployment, non-farm payroll data also. So we got a bunch of different stuff, but SPY 474. Yeah, Tesla's still over it. Q bouncing back again. We're still flat since the opening bell. Like, we're very choppy. We haven't really done much since the open, so we're just kind of waiting to see if we get anything good, but it's still so slow right now. Whole market doesn't know what to do. You know, and again, we'll see if we get anything favorable from the FOMC Minutes report. Again, it's just going to be a detailed file. We're going to use AI to interpret it, though, so we'll use AI to figure out what they might say or do for the next Fed meeting. All right, guys. Sorry. Phone call. So the FOMC Minutes report, every 6 weeks the Fed makes their rate decision. If inflation's really bad, they raise rates aggressively, or maybe not so aggressively, maybe ease into it. But the point is, if inflation's really bad, they raise interest rates. They raise what's called the federal funds rate, which basically forces the banks to raise interest rates to compensate for it. Anyways, every 6 weeks that happens. If inflation's bad, then they raise rates aggressively. If inflation is not so bad, they can either pause, which is what we currently have been doing, is pausing, or we can cut rates, lower rates. In the end, that happens every 6 weeks. And then weeks after that, 3 weeks later, after the FOMC meeting, they drop what's called the Fed Minutes report, which is a detailed breakdown of why they chose to make the decision that they did in the last Fed meeting. It's basically a reaction to the last Fed meeting. That's what drops today at 2 p.m. It releases exactly at 2 p.m. every time it comes out. And so again, we'll see what happens. That's the thing to watch here. And again, sometimes it causes a lot of volatility. Sometimes it doesn't. And so again, we'll see. It doesn't necessarily have to cause crazy amounts of volatility. Sometimes it does. Sometimes it's choppy or sideways, but that's what this report is. So a new Star Wars is coming out. Obaid Chinoy is going to be the director. She said, quote, "We're in 24. It's about time we have a woman shape a story in a galaxy far, far away," end quote. Good or bad move for Disney, guys? Good or bad move? Let me know what you guys think. If the rates are cut, what's the implication on US 30? Well, we're not going to get a rate cut until at least March, I would say. I mean, it's possible they cut it in at the end of this month, but it's just unlikely. It's less likely. I mean, it could happen, just not super likely. Like, we could see the probability here of the FOMC here. Yeah, so again, we'll see what the new Star Wars looks like, guys. The rate cuts are already priced in. Don't expect a huge rally. Yeah, again, if we look at the probabilities here for a rate cut, right now, 91% of people think that we're going to pause again. I think we're going to pause again as well, and I've gotten everyone right over the last 6 months. It's not that hard to do because we almost always do what's expected here on the CME Watch tool. 8.8% of people think we're actually going to cut rates by 25 basis points. Again, I think that's less likely. I think if we're going to raise rates, or if we're going to cut rates, I think it'll most likely be, in March. Potentially in March. I think it could also be in May is when a lot of people were speculating. So not this next meeting in January at the end of this month, but March or May. So somewhere along these two meetings is when the most likely cut will happen. The question is, how does the market react to that? One of those two meetings is usually when the cut's going to happen. And so again, the question is, how does the market react to that? I don't know. We'll have to wait and see. What do you guys think? We got 15 minutes here, team, until the report goes live. Got about 700 people here live right now. So again, if you haven't already, hit the like button. We appreciate it. Looking at our votes, 53% of people think it's going to hurt the market. We're going to close red on YouTube. 47% think we're going to go green. Looking at our Twitter profile, we got a decent amount of votes. 71% of people think it's going to help. 29% of people think it's going to hurt the market. This isn't an FOMC meeting. This is a reaction to the previous FOMC meeting. This is a 12-page reaction, detailed analysis of the last FOMC meeting. So every 6 weeks, the FOMC meets. and they have the press conference and Powell in the meeting. 3 weeks later, they dropped this 12-page document called the FOMC Fed Minutes Report. That's what's coming out today at 2 p.m. They have glass that comes with it, maybe, but here I'm streaming, so I have to look at it. I don't think so, but yeah, it's alright. Yeah. Guys, I have PE for BTST. You have what? PE? What do you mean? How will this affect the dollar index? It might affect it. It depends on what the market does. If the market goes up, the Dixie will probably move down. If the market moves down, the Dixie will probably move up. Usually the Dixie has an inverse correlation with markets. So it depends. What's up, Kevin? Hey, Happy New Year to you guys as well. Please stop spamming. I don't know whether you should buy or sell, bro. Nobody does. All right, team A, we got 12 minutes. Is this related to SEC approval or disapproval of the Bitcoin spot ETF? No, not really. This is regarding rate hikes and FOMC meetings for the Federal Reserve. All right, so the 10 richest people in the world added almost $500 billion to their wealth in 2023. Elon ended the world as the world's richest person. He ended the year as the world's richest person. Year to date in 2023, he made $92 billion in the tech industry. Total net worth is almost $230 billion, $229 billion. Speaking of watches, Bernard Arnault is now the second richest man in the world. He made $17 billion last year in 2023. He has a net worth currently of about $179 billion. Jeff Bezos, number 3, made about $70 billion in 2023, net worth of $177 billion. Bill Gates, number 4, up $31 billion on the year. Total net worth is $141 billion. Zuckerberg made $82.5 billion last year, up $128 billion. Number 6, Steve Ballmer, number 5, at $131 billion, up $45 billion. Larry Page, Larry Ellison, Sergey. Man, I need to name my son Larry. Sergey and Warren Buffett top the list, in the list, in the bottom 3. Bernie Sanders said, quote, the boomer generation needed just 306 hours of minimum wage work to pay for 4 years of public college. Millennials need 4,459 of those same hours, end quote. And again, do you agree with Bernie Sanders? I've got my disagreements with my guy Bernie, but, you know, I don't know if it sounds like he's probably right about that. I know it's a lot harder to buy a house now. College is more expensive. It's been rough. All right, team A, we got 10 minutes. 10 minutes. Tesla, move it up a little bit. Yeah, I don't know if you should buy gold or not. I like gold. I think gold's one of the best long-term inflation hedges, but short-term, I don't know. Yeah, that's what I'm saying. It doesn't sound like he's wrong, man. Again, I'm very neutral politically. Don't think I get super involved with politics because I really don't. I don't like either side. So we're going to break it down using AI in a very quick way. So that's what we're going to do. We're going to break it down using AI. We got over 800 votes here. We're also going to put this thing in sub-only mode, team. If you haven't already, hit the subscribe button. We are going to throw this thing in sub-only mode. We appreciate it. We got about 1,000 people here live. When the report drops, hopefully we'll have over 2,000. Sometimes we do. It just depends. And we're going to break it down fast. All right, guys. FOMC Minutes. You guys ready? What should I do? I don't know, bro. What should you do, sir? Yeah, we've been using AI for the last 3 or 4 meetings. It's helpful. We're also going to be doing a crypto show where we talk about the Bitcoin spot ETF. All right, guys. So, hey, look at Tesla bounce. Q rejecting at the volume weighted average price, still under $400 at $399.30 or so right now in the Q. Yeah, we cover every other meeting, Sam. So we cover FOMC meetings, CPI, PPI, jobless claims, retail sales, unemployment, non-farm payroll data. We cover all Jerome Powell press conferences in general, and we stream every event live on stream so you can watch it in real time. We also stream all the major earnings reports like Tesla, Amazon, Apple, Walmart, Google, all the big boys. We stream those earnings as well. We don't charge a penny for anything, and we get thousands of people tuning into these reports because we cover them quickly relative to everybody else. And we're a reliable kind of one-stop shop for it. So if you haven't already subscribed, I appreciate it. Yeah, all good, Scooter. I got you, bro. We're going to do a crypto show after this one today, man. So stick around. Hey, thanks, you cuts. Appreciate you, bro. But yeah, we're gonna talk about the Bitcoin ETF, all that stuff. Isn't the meeting minutes already factored in? Not necessarily. I mean, it could be future Eddie, but that would be under the assumption that they already know what's in it in the meeting. So I'll put it this way: the last FOMC meeting is already baked into the market without question, right? But what the FOMC minutes report does is it gives us a little bit more foresight into what they might potentially do in the next meeting. It gives a little bit more detailed breakdown of why they made the decision they did in the last meeting, which in this case was a pause from the Fed. The Fed paused. I can't say paused. The Fed did not raise or cut rates. They ended up pausing. Man, that just sounds weird for me saying it. Maybe it's my accent. I don't know. But anyways, they're going to give a little bit more detail of a breakdown on why they chose to make that decision where they did not raise rates last meeting. They skipped. And so, we're going to use AI to interpret it and break it down really quickly. And we'll kind of read it fast like we always do. So it'll be helpful, I think. Hey, thank you, Dragon. Gonna hedge and chill. Good luck, bro. Glad to find you. Sounds perfect. Hey, thanks, man. Welcome, bro. Again, we day trade live. We swing trade. We invest. I'm mostly a long-term investor, but I do day trade every day live at the opening bell. I've got some pretty good risk management systems that I use on a regular basis. If you guys want to check out our daily streams, mostly we cover economic reports, though. So, like, as an example, tomorrow we have jobless claims. We've got non-farm employment change. And I think we've got a couple other meetings. I think we might have services PMI tomorrow, which is non-manufacturing PMI data. Friday we have non-farm payrolls and unemployment data, which in a market where, like, this morning we had what do we have? Oh, this morning we had the JOLTS report, which came in under expected. So underwhelming JOLTS report, less job openings than expected. And the market actually pushed up a little bit versus when that report came out. If you look at the Q here, the JOLTS report was released right here, but it actually did dump down afterwards. So you got to question what does the market actually want? In previous meetings, Fed Jerome Powell said that he wanted the job market to go down a little bit. He thought that it was too robust, is the verbiage that, or the wordage that he used. He said it was too robust. And so what he meant by that is, like, in order for us to hit our 2% inflation goal over time, too many people are working and spending. And when we have an abundance of spending, what do businesses do? They raise prices because they can. I always tell people the exact same example. But, like, if I sell bubble gum for 25 cents and I put up 100 pieces of bubble gum in my store, just as a very simple example, I put out 100 pieces. By noon, they're all sold out. I put up 500 pieces of bubble gum. By noon, they're all sold out. What am I going to do next? I'm going to raise prices. I'm going to bump that up to 40 cents, 50 cents a piece. Why? Because I can. Extrapolate that to a much larger scale. And, like, that's why Jerome Powell wants a push down labor market. He wants less people spending because that means it's going to be an easier path for us to hit that 2% inflation goal over time. I hope that makes sense. That's what he's essentially saying in that report. And so again, with today, like we had the JOLTS report, job openings, and then tomorrow we have jobless claims, which is how many people are filing for unemployment. We also have non-farm employment, which is kind of prelim payroll numbers. And then Friday, we've got non-farm payrolls and unemployment, all jobs related this week and very relevant for, you know, rate hikes, decisions, the Fed, the stocks, the stock market. And so that's kind of where we're at now. Dixie up or down? It depends on what the market does. The Dixie usually is inversely correlated with the S&P. Pausing. Yeah. I just end up sounding funny in my head. Maybe I'm just repeating it too much. Yeah, non-farm payrolls are fun for sure. Rate cut, weaker dollar, gold buys. Yeah, gold is one of those things that moves mostly with the market unless we get really bad action, and that way gold will move inversely to the market if we have like a crash, or if crypto, or if like banks really struggle. Like a lot of people hedge with gold, and so one thing that you saw like earlier in the year, you saw the banking crisis with a lot of regional banks failing. Something that you saw is a lot of people hedge and start buying up gold, start buying up Bitcoin and other cryptocurrencies to hedge against banks. Because when the public doesn't trust banks, what do they hedge with? They buy gold, they buy crypto, they diversify into other assets. And again, gold is one of the best inflation hedges long term. All markets are basically trying to keep up with inflation. And so gold, I think, is 7x'd over the last 20 to 25 years. You compare that to like the S&P, which is 4x'd or so over the last 20 to 25 years. You know, real estate has done something similar. And so they're all keeping up with inflation. That's the goal of investing into all these different things. Gold, though, short term is a little bit more volatile than something like, you know, real estate or the S&P 500, although maybe real estate's not the best example of that. All right, guys. Hey, we got a minute and 20 seconds. Let's get ready. Let me get the FOMC page up. And again, we'll post the document here, but we're also going to use AI to interpret it quick. So stick around. All right, so we got our AI set up. We got less than a minute here. Bear with me. All right, here we go. All right, so here we go. Y'all ready? Let's do this. Waiting for the document. Let me pause this. All right, so 5 seconds, guys. 5 seconds. Here we go. All right, so again, we're going to use AI to interpret it. All right, let's watch the market here. There's the Q on the right side. I'm going to put like gold up on the left. All right, so there's the minutes report. You can see the market actually down a little bit initially from this report. Waiting for the minutes report to show. Okay, there's the, no. Minutes report's not out yet. It'll show up right here. Again, we're going to tell you when it's out. Waiting. A little bit of volatility from this report. Refreshing. Waiting. Yeah, so we're still waiting. Market's up a little bit from this report, though. A lot of the time, algorithms will pick it up. All right, we got December statement. No minutes report yet. And here, I'm going to try opening it up on a different browser. Bear with me, guys. Nope, it's still not out on this one. So again, it looks like they're a little bit late in dropping this report. Market hasn't really moved. Look, here it is. It's going to show up right here on the minutes report should show up right here. But it's late. Weird. They're late. right, so we're gonna start. Dude, they're late on this report today, guys. Usually it's much faster than this. And I've looked at 2 different browsers and nothing. Weird. Look, here's the report. Again, it should show up right here, but they just haven't dropped it yet. The minutes report should show up. Let's look elsewhere. All right, so FOMC Minutes report, participant viewed policy rate as likely or at near its peak. And so we're going to start detailing some of this. Yeah, it could be a traffic jam. Again, we're going to give you some cliff notes of this report while we're looking at it and watching the market move. Participants stressed the importance of maintaining careful data-dependent approach. Most participants expected restrictive policy stance to continue to soften spending and reduce inflation. And so again, we're putting this report out here. I'm going to put the cliff notes in the chat right now. Again, giving you guys some breakdowns of it so you guys can see it. Yeah, so well, it's not, I mean, they can talk about it, but it's a 12-page document. And so that's what we're looking at now. All officials said clear progress made in 2023 towards Fed's 2% inflation target. Officials viewed risks to inflation, employment moving towards greater balances. And again, we're going to put this up on stream. Market's moved a little bit here. All right, team. All right, so the minutes report is out. We're giving you guys some cliff notes here. Again, FOMC participants viewed policy rate as at or near the peak. So far, the market's starting to test the bottom of this range. It hasn't really moved that much. So far, we're starting to test the bottom. You can see gold on the right or on the left side. At or near its peak, game over. Yeah, look, there's the breakdown of 398.80s. Again, we're still giving you guys some cliff notes. FOMC minutes show all officials said clear progress made in 2023 towards Fed 2% inflation target. Again, we're putting this all in chat. Viewed risk to inflation, employment moving towards greater balance. Again, market's not liking this report. It's starting to break down a little bit here. Still breaking down the big breakdowns. So big breakdowns here. When in doubt, zoom out. Yeah, so look at the breakdown from the FOMC minutes report here. Big, large breakdown. Big, large flush. Again, we're seeing updated data here on these cliff notes. So again, so far, we're going to break this down again. All right, we're going to break this out again. Participants stressed the importance of maintaining careful, data-dependent approach. Most participants expected restrictive policy stance to continue to soften spending and reduce inflation. The FOMC minutes show all officials said clear progress made in 2023 towards the Fed's 2% inflation target, and officials viewed risk to inflation, employment moving towards greater balance. The FOMC minutes report saw officials saw upside risk to inflation as having diminished, and inflation is still above the goal. So that's where we are now. That's where we're at now. See if we can get some more data here. Yeah, so look at the big bounce back here. So again, we are getting a big bounce back. Let's see if we got more stuff. Hold on. Big bounce back to 399.10s here, 399.10s. So again, I guess this probably is the quote that is making the market go up. We're putting this up on screen. FOMC officials saw upside risk to inflation as having diminished. Inflation still above goal. I think that's a positive, optimistic sign. And again, the market's starting to bounce back here. Hey, Pawn, check your messages, brother. All right, it's a bounce back here. Just to retrace. Panic sellers. So if you want to see the actual information here, I'll post it right here in chat if you want to see the actual information. It's a 12-page document, so we're not going to be able to break everything down, but if you want it, there it is right there in chat. A lot of stuff starting to bounce back, but we're not completely back yet. I'm still looking at the all right, so the Fed minutes report, Fed officials reaffirmed it would be appropriate for policy to remain at restrictive stance for some time. So they did reaffirm this in chat right here. So we're still moving back. So these are I'm using AI to give you guys these cliff notes that you see at the bottom. So JP's not speaking at 2:30. This is just a breakdown of the previous Fed meeting. So we're giving you guys some cliff notes now. All right, so again, we'll break this down. Hold on. Markets. Let me see. Hold on, team. Trying to show. Bear with me, pun intended, I guess. Markets are starting to bounce back again. We're giving you guys some AI cliff notes. All right, markets are all the way bouncing pretty decently back up. Again, we're still giving you guys some cliff notes. Bear with me. Again, just to break down the cliff notes right now. We're going to break them down real quick. Participants stress the importance of maintaining careful data-dependent approach. Most participants expected restrictive policy stance to continue to soften spending and reduce inflation. All officials said clear progress was made in 2023 towards the Fed's 2% inflation target. The officials viewed risks to inflation, employment moving towards greater balance. Officials saw upside risk to inflation as having diminished, but still inflation is above goal of 2%. Officials reaffirmed it would be appropriate for policy to remain at restrictive stance for some time. That is the Cliff Notes we have so far. Starting to break back up. And again, if you want to check out one of my sponsors and help support the channel, Top Step is one of my sponsors. Great way to help support the channel. If you want to day trade the S&P 500 or the NASDAQ, basically the SPY or the Q price action, you can do so in futures with no PDT rule. The easiest way to do it is Top Step. It's a great way to test your skill. The first thing to understand is almost all day traders lose money. A large majority of day traders lose money. And so you could try to look cool and put up thousands yourself and probably lose that. Or you could try a funded account program like Top Step, which is the most legit one in the world. They give you a demo and they test your skill. If you could pass the test, hit their profit target without hitting the max loss, and the base one is a 50K one. It's only 49 bucks. You only have to make 3K without losing 2K. So it's a 2-to-3 ratio, pretty reasonable. If you can do that, they fund you 50K with a 90% split. And so you're keeping most of your profit anyway. Once you're funded at 90%, but your risk is so much less. And so it's a great way to learn day trading. Just taking the challenge builds your skill in trading. And again, it's a great way to help support your boy here in this channel. You can get the base combine for only 49 bucks. Here's the link. Great way to help support the channel. And we're breaking down the minutes report. We got all the, we got everything we can so far. Let me look elsewhere. Bear with me, team. Hold on. Yeah, so we got the FOMC Minutes report. Let me check this. All right, so Fed officials saw policy remaining restricted for some time. Again, a few participants suggested the FOMC could face a trade-off between dual mandate goals in the period ahead. Those participants pointed to downside risk to the economy associated with an overly restrictive stance. A number of participants highlighted uncertainty around how long restrictive policy would need to be maintained. FOMC members generally viewed addition of the word any to comments on possible additional firming as relaying their judgment that rates were likely at or near the peak. Giving you some breakdowns. In projections, almost all participants indicated their baseline implied a lower federal funds rate would be appropriate by the end of 2024. So basically cutting rates. Again, Fed officials saw further rate hikes could become appropriate. Several said rate could stay at peak longer than anticipated. So again, that's breaking it down. Mostly flat reactions here. So mostly a flat reaction to this report. How about gold? Let's take a look. Gold is down pretty heavily. It's actually testing lows. The S&P is down more. All right, so again, basically, most participants expected restrictive policy to continue to soften spending. Officials viewed risk to inflation employment moving towards greater balance. Officials judged that GDP growth would cool, labor market rebalancing would continue in 24. All officials said clear progress was made in 23, and they viewed policy rates as likely or at near the peak, is basically the breakdown of the FOMC Minutes report here. All right, so again, here's the actual minutes report if you're having trouble finding it. So here's the actual minutes report right here. Hey, shout out to Mark for becoming a member. Thanks so much, man. I appreciate it. Thanks so much. So again, we're still kind of peeping out everything. Starting to break down a little bit now. Finally, it looks like. And again, if you haven't already, check out Top Step. We might day trade a little bit today. Let's see. We've been day trading some today. Top Step is a great way to learn how to day trade. There's no PDT in futures. Like when I first started day trading, I lost like 3K in like 3 weeks. So it really is something, no matter what course you take, who you follow, you're probably going to lose at day trading. You get some people that hate on these funded account programs, but again, most day traders lose money. So you can either have a middle ground of pressure in a funded account program, but limited risk. You're still learning how to trade under pressure. If you could pass the test, you still get 90% once you're funded anyway. And if you lose, you're out $50 versus thousands, right? I think that makes perfect sense. It's a middle ground of pressure. And again, in the futures market, you could day trade essentially the SPY, essentially the Q, in the E-mini and the NASDAQ E-mini. So I think it makes perfect sense to limit your risk. If you can prove that you're profitable on Top Step, then you can put in real money or do whatever you got to do. But I think this is a perfect middle ground for new traders. I genuinely wish I had something like this when I first got started. All right, did you guys get my link? Here, let me post it just to make sure. All right, so that's the FOMC Minutes report right here. Yeah, there's the Minutes link right there. Yeah, gold traders are here during every major FOMC meeting. Eli, that's just how they are, brother. It's all good, you know. 34 trillion in debt. Rates can't go higher. Hey, what's up? Again, we put the link up for Top Step in the chat. If you guys want a little bit more detailed breakdown, I can. Let me know. Like, I'll break it down really quick in a detailed way right here if you guys want. Just let me know. Very interesting market right now. Very interesting. You know, here's another one of my sponsors. Let's take a... Sorry, I'm checking it on different time frames. It's been choppy. Let's see if the market starts to bounce back up. Let me see. Wait, does Powell speak tomorrow at 9 a.m.? Does he really, JG? Somebody help me out. I don't think he does, but I'm checking right now. Yeah, I don't see anything tomorrow. And again, y'all correct me if I'm wrong. Usually I'm on top of these if he does. Market's starting to bounce back a little bit. Okay, where, JG? Where does he speak? I hope you're right. I love it when Powell speaks, but, like, I don't think you're right. Yeah, he didn't speak tomorrow. I don't see anything either. It would usually I have some pretty good sources to find it. And I don't see anything about him speaking tomorrow. I wish he would, because again, that's always good for me, to be honest. 9 a.m. you say? Yeah, he's not speaking tomorrow. Sorry, team. Yeah, he's probably still doing his holiday thing. So there is no meeting today. It's a reaction to the last meeting. So again, guys, a lot of y'all don't seem to understand what the FOMC Minutes report is. It's a report. It's not a meeting. There is no report. It is not a meeting. Again, it's not a. It's not a. All right, so we're gonna break down developments in financial markets and open operations real quick. We'll break this down into steps, okay? All right, so during the reviewed period, the FOMC noted eased financial conditions due to low interest rates, increased equity prices, and weaker dollar. This reversal followed tightening in the preceding months. Nominal treasury yields decreased, especially at longer maturities, as investors perceived reduced risks of prolonged inflation. Markets interpreted FOMC communications as suggesting the peak policy rate had been reached. Again, peak policy rate potentially reached. The Treasury Department's indication of shorter-dated Treasury issuance also influenced market dynamics. Surveyed participants anticipated the peak federal funds rate had been reached, with the first rate reduction expected in June. Usage of the overnight reverse purchase agreement facility decreased, so forth and so on. So that's developments in financial markets and open operations. All right, so that's the first step. Again, we're going to break this down in a little bit more detail here. Bear with me. All right, so hold on. Let me All right, so again, we're looking at the next one here, which is staff review of economic situation. A little bit larger report, but we're going to shorten this one even more. All right, so the December meeting revealed slowing U.S. GDP growth from a robust third quarter with tightening labor market conditions. Job gains moderated, unemployment held at 3.7%, and wage growth slowed. CPI inflation, though elevated, showed signs of easing, and core PCE was 3.5%, down from the previous year. GDP growth indications suggested a slowdown with manufacturing and trade deficits in October. Forward economic growth impacted by monetary policy tightening reflected subdued activity. And while global inflation remained elevated, recent data indicated a notable decrease attributed to slowing demand and falling oil prices. Foreign central banks maintained policy rates, emphasizing the need for restrictive stance to address inflation concerns. All right, so that's breaking down each. We're breaking down each of these sectors. We're going to look at outlook. All right, because I think outlook is one of the most important part. All right, so we're going to look at outlook. All right, so get ready. We're going to look at outlook here, team. We're going to make this one a little bit shorter than the last one. All right, so here's outlook. All right, the staff's December economic forecast anticipated a market slowdown in the fourth quarter GDP growth, but predicted solid growth for 2024. Lagged effects of prior monetary policies were expected to restrain economic activity in the coming years. Real GDP would increase more slowly than potential in the next 2 years before aligning to 2026. The unemployment rate was projected to remain steady through 2026. The revised staff revised down their inflation forecast due to the lower than expected data, anticipating somewhat below 3% PCE inflation this year. Risks included upside inflation and downside economic activity due to monetary tightening. All right, so again, bear with me. We're looking at this. We're summarizing this quickly here, guys, so bear with me. Now we're going to look at the participants' views on current conditions and economic outlook. This one's a much larger reaction here, so bear with me. We're going to shorten this one substantially, though, so hold on. Let's see if it'll let me. All right, so here we go. So during the FOMC meeting, participants submitted economic projections for 2023 and 2026, indicated a cooling GDP growth in 2024 with concerns about elevated inflation. Despite a strong labor market, they noted signs of slowed economic activity and softer consumer spending. Business sector reports were mixed, with higher interest rates impacting investment. The labor market, while still tight, showed signs of better balance. Participants expressed high uncertainty with potential upside risk to inflation and downside risk to economic activity. The policy rate was deemed near its peak, and maintaining the current stance was supported to assess progress and gather more info. Most participants anticipated a lower federal funds rate by the end of 2024, but uncertainty prevailed, emphasizing a data-dependent approach and the importance of careful policy stance. The ongoing reduction of the Fed's balance sheet was considered essential, with discussions on tech factors for potential adjustments underway. All right, so that's kind of a breakdown of everything that they just broke down. Markets are kind of liking this report. It is starting to head up a little bit. After all that you just read, should I buy or sell? Honestly, dude, I have no idea what you should do, brother. I really have no idea. Again, market's liking it. Market's moving up right now. You can see the SPY or the Q basically on the right side. Starting to head up a little bit. We'll see if it continues. Again, let me know what you guys think. We'll see if it continues. But that's a breakdown of everything that just happened right now. That's a breakdown of everything. So also, guys, another one of my sponsors is a company called Chart Prime. It's a trading view indicator service you could use in stocks, crypto, forex, futures. What I'm really impressed about is the strong signal. So this is an indicator called the Market Oracle and Market Dynamics. So these are two different indicators. Again, they're a sponsor of mine, and so I'm certainly biased, but like, let's back test them really quickly on today's price action. Look at the strong signals. The strong signals are the most powerful in my opinion. Look at this strong signal here, and then look at this beautiful breakdown. Buy signal here worked. Sell signal here worked. Strong signal there worked. This buy signal didn't work, so we'll put an X over that. This one definitely worked. Nice little bounce. This sell signal worked. This one didn't work. This strong signal, again, the most powerful, worked, and then this buy signal worked. All right, so we're back testing it ourselves. This is a sponsor of mine. I can't guarantee you're going to make money, but I also can't fake this. So again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 2 out of 10 didn't work. So that's 80% today, 80%. Using the regular market Oracle. And again, you can use this on anything with a symbol on TradingView, on stocks, forex, futures, whatever you want to use, you can use it with a symbol, and you can use it on any time frame. I can put an hourly chart up, and there's a lot of stuff that they offer. It's like 40 or 50 bucks a month. You can use the screener. I look like John Madden over here, but again, you can use the screener. You can use their back tester to really get a good idea of what's going on and put this up and test different things. It's really useful. Check them out. Again, they are a sponsor of mine. Market just ripped up over 400 on the Q. Q is now over $400. Let's see if it actually holds. Let me know if you think it'll hold. And again, we'll put the link up for Chart Prime right here in chat if you want to check it out. We'll also put this banner up. You can check that out as well. Gold. A lot of people talking about gold. Gold is starting to bounce back up a little bit as well. So again, you can check out Chart Prime there. Look at gold. Gold is heading up. It's at 2040s right now. 2040s. Big pop up here. Again, we'll see if it continues, but man, what a rip. SPY at 5 minutes, 200 EMA. Will the market move up or down? I'm going to end this poll really quick. We got 4,000 votes on this poll. 4,000 votes roughly. 3.8 thousand. All right, we're going to round up. 53% thought we'd go red from this report. 46% of you were correct so far, at least with green action. You can see gold on the left side moving up. So we do have some bullish actions from this report so far. The minutes report, I thought it was positive. I thought it was optimistic and dovish. We're starting to look a little bit better than we were a year ago, I would basically say, in this report. And that's essentially the overarching point that I think a lot of the, participants made from the FOMC is that we're looking a lot better. It doesn't mean we're out of trouble yet. It doesn't mean we're not going to move down or correct. They did think that we could correct short term, but the market likes it. The market likes it. So again, we'll see if we continue, but the market's starting to bounce back up. And again, we are going to do a crypto show today. All right, again, guys, we are going to be doing a crypto show. Markets are loving this right now. So at least we got some volatility from this report. Bro, I got like 1,000 thumbnails on this. I gotta... There it is. What's up, team? I see all you guys here still. We got 1,800 people. Gold to the moon. Yeah, so Alexi, just to clarify, I see a lot of people. Again, I'm going to put this up because I see a lot of people think it. Here. All right, so again, I'm going to put this up big, bright. The FOMC Minutes report is not a press conference. It is a 12-page reaction document to the last FOMC meeting from December. I appreciate the love, though. Thanks so much. I recognize that you're just genuinely being supportive, and I truly appreciate that. Thanks so much. I appreciate it. But again, this is not a press conference. Big Papa Jerome Powell is not speaking today, brother. So I hope you guys understand. It happens every 6 weeks, but I appreciate the love. Thanks so much. Again, so far the market's bouncing up a little bit, so that's nice. We'll see if it continues. Also, y'all slap the subscribe button. I mean, don't be stingy. I mean, listen. I'll never pressure you to subscribe or like, but I'll hate you forever if you don't do it right now. We got a little pullback on the Q. Gold's bouncing back up some too. Yeah, all good, Alexi. I appreciate the support, bro. Again, we're going to do a crypto show today, so stick around. We are going to be doing a crypto show, so bear with me. All right, team. Let me go over. We are going to do a crypto show today, so again, y'all stick around. All right, so look at this pullback on the Q. Is it time to buy the dip? Guys, let me know. Is it time to buy the dip? I don't know if it is or not. We'll see. But what was the matrix port? All right, let's see. Again, almost done here, guys. Hold on. All right, team. All right, so again, we're going to be doing this crypto ETF. Let me check on everybody here to make sure y'all are okay. As I said here, quietly not saying anything. I'm sorry. All right, guys. Hey, we got this pullback. Is it time to buy the dip? I don't know. We're going to go ahead and start this stream. We're going to go ahead and start this stream. If it does not bring you, it should redirect you immediately to the stream. If it does not for whatever reason, again, if it does not for whatever reason, go to this link. There's the link right there. Again, I'll see you guys later. Y'all be safe. Again, I'm going to end this stream. If it doesn't bring you, go to that link. If it does, it'll automatically bring you there. It should redirect you directly to this stream. And so, again, if it doesn't for whatever reason, you know. All right, guys. I'll see you guys over there.